I sold Palantir stock before earnings. Sofi stock news updates and analysis before their earnings. Hey there! Today, we've got some hot topics lined up that you won't want to miss. First off, we'll be diving into the recent buzz around Palantir Technologies, ticker symbol PLTR, and how two analysts have been expressing some caution about its stock in recent weeks. But that's not all. We'll also be peering into the crystal ball to see where Palantir Technologies might stand 3 years from now. Is this data analytics powerhouse poised for even greater heights, or are there potential challenges ahead? And speaking of challenges, we'll explore why there's been a rating downgrade for Palantir stock due to its continual revenue growth deceleration. Does this mean the stock is getting too pricey, or is there more to the story? But wait, we're not done yet. We'll also be shining the spotlight on Sofi, or social finance, a company that's been gaining significant attention as the potential bank of the future. With all the excitement surrounding this fintech giant, we'll examine what makes Sofi such a compelling investment opportunity. Now, before we get started, don't forget to hit the like button and subscribe to our channel so you never miss out on our latest stock updates and analysis. Two analysts were cautious on PLTR stock in recent weeks. Let's jump right into the latest buzz around Palantir Technologies. Their stock is up by about 1.5% today, and here's why. They just announced a deal with Spectre Ops, a tech company specializing in IT security. As part of the agreement, PLTR will provide Spectre Ops enterprise-grade defense solution called Bloodhound Enterprise to some government customers. This collaboration will be integrated into Palantir's FedStart as AAS product, creating a secure environment that bundles multiple products from different vendors. It's a strategic move to make it easier for companies to market their services to government agencies in Washington. What's so exciting about this? Well, FedStart's magic touch allows these firms to meet the government's stringent security standards quickly and easily, which is crucial when dealing with government contracts. Now, let's talk about Spectre Ops. They're an IT security startup with a solid reputation for enhancing defense against cyber threats. Their team is packed with experts from various fields like finance, healthcare, federal programs, intelligence, and the military. Oh, and one more thing to note, Spectre Ops just raised an impressive $33.5 million in their recent Series A funding round. Not bad at all for a young company. But it's not all sunshine and rainbows for PLTR. Recently, two analysts expressed some caution about the stock. Investment bank Raymond James downgraded the rating to outperform from strong buy, mainly due to concerns about valuation. However, they remain optimistic about Palantir's AI opportunities and predict a potential financial low in 2023, setting an $18 price target. Meanwhile, Seeking Alpha columnist SL Investments took a more bearish view, expressing concerns about Palantir's business being affected by the slowdown in the US economic growth. Ouch! Despite these cautious reports, PLTR stock has been on a bit of a roller coaster ride, showing a 17% climb this year and an impressive 99% surge in the last 3 months. Where will Palantir Technologies be in 3 years? Alright folks, now let's take a closer look at where Palantir Technologies or PLTR might be headed in the next 3 years. It's been a bumpy ride for this data mining company since it went public back in 2020. Initially, things were looking pretty good. Palantir stock soared from $10 to a whopping $39 in 2021, thanks to its rapid growth and solid government contracts. But then the stock took a hit, dropping to its lowest point of $5.84 in 2023 due to some concerns about its growth slowing down and rising interest rates. But fear not, the stock made a bit of a comeback and is now hovering around $16. The question is, can Palantir keep up the momentum and climb even higher over the next 3 years? Let's see what's been happening with Palantir so far. They operate two main platforms, Gotham for government clients and Foundry for commercial clients. These platforms collect loads of data from different sources, helping their customers make important decisions. Their revenue growth was pretty impressive, but it has slowed down a bit recently. They faced some macro headwinds that affected their commercial business expansion, but they're working on cutting costs to stay profitable. However, this newfound stability might not be enough to satisfy growth-focused investors. Looking ahead, Palantir aims to reduce its reliance on government contracts by expanding its commercial business. But they'll have some competition from giants like Amazon and Microsoft, who are also stepping into the data mining and analytics game. Moreover, Palantir's government business could face challenges too, as some agencies might develop their own data collection platforms, potentially impacting Palantir's government sales. Analysts predict that Palantir's revenue will continue to grow, albeit at a more moderate pace, and they expect the company to turn a net profit in 2023. However, despite the growth, Palantir's valuation might be a bit too high, which could limit its stock gains. Palantir. Continual revenue growth deceleration makes stock too expensive. Rating downgrade. Many analysts are bullish about Palantir's long-term potential, given its AI-powered software success in the tech industry. However, one notable analyst recently expressed concerns about the short-term growth prospects. They trimmed their position in the company, fearing that the current macroeconomic conditions could hinder Palantir's growth path. During economic booms, businesses have more funds for innovation and development, benefiting Palantir. But during downturns, companies focus on preserving margins rather than investing in growth, affecting Palantir's customers and consequently the company's growth. The US economy's recent decline in performance correlates with Palantir's revenue growth, indicating the impact of macroeconomic conditions on the company's prospects. With projections of sluggish GDP growth in 2023 and 2024, the analyst questions Palantir's current valuation despite its recent stock surge. Although Palantir's powerful AI-driven software could thrive even in tough times, the analyst remains skeptical about its growth potential during the ongoing economic slowdown. They consider Palantir's stock a sell for now, but acknowledge that the market can change rapidly, urging everyone involved to closely monitor developments. Sofi, the bank of the future. Let's talk about Sofi, a technology-driven company offering diverse financial solutions. They primarily make money through loans, with a significant focus on student loans, attracting a young clientele. But that's not all. They also provide services like investing platforms, debit and credit cards, insurance products, and CDs. Sofi's revenue streams can be broken down into three main segments. Lending. This is their biggest revenue source, encompassing home, personal, and student loans. Student loans are a massive market for Sofi, and a recent Supreme Court decision had a significant impact. After a slight dip in 2022, student loan originations have been on the rise again in 2023. Financial services. This segment includes deposits, credit cards, brokerage accounts, and more. Although it's the fastest growing segment, it currently operates at a loss. Financial technology. This part involves platforms like Galileo and the Technices, providing services to other neobanks. While this segment experienced rapid growth in 2022, it slowed down slightly in Q1 of 2023. Looking at their financial performance, Sofi has shown impressive figures. Their net interest income grew at an impressive 102% 3-year CAGR, with non-interest income also experiencing solid growth at 50% CAGR. In terms of profitability, Sofi has made remarkable strides, going from breaking even to earning over $75 million in adjusted EBITDA by Q1 2023. That's a huge leap. What's truly remarkable about Sofi is their ability to increase profitability effectively. By investing significantly in sales and marketing to attract new members, they've seen substantial returns. Each new customer becomes a potential revenue-boosting opportunity for the company. SoFi users typically start with simpler services like opening a brokerage account or a CD, and then gradually explore other products, including taking loans, which is a high-margin activity for SoFi. This customer stickiness contributes to their strong growth, outperforming traditional banks and dominating the market when it comes to new checking accounts. The younger generation has embraced SoFi, and they're likely to continue using its services as they grow older and become big spenders. Looking ahead, SoFi has an optimistic forecast with a projected 30% revenue growth in 2023 and an expected 14% adjusted EBITDA margin for increased profitability. Some analysts even estimate SoFi's valuation to be close to $26, which is more than double its current price of $20. Of course, there are considerations to keep in mind, such as potential political risks related to their student loan portfolio and their current operating loss. Nonetheless, SoFi has a solid foundation and a bright future ahead, securing its position as a consumer favorite, executing well in terms of growth and profitability. That's all for today, and we'll see you in the next one.